She has no idea she's sitting on a gold mine.
Well, she doesn't know that if she owns a life insurance policy of $100,000 or more, she can sell all or part of it to Coventry for cash, even a term policy.
Even a term policy?
Even a term policy!
Find out if you're sitting on a gold mine. Call Coventry Direct today at 800-476-0100 or visit coventrydirect.com.
If you're an executive, this shirt is a must-have in your closet.
I was tired of floppy collars and shirts with sweat stains, so I got this shirt I saw on TV, and now I don't have to worry about any of that. I got it shipped in no time, and I switched from regular polos to this immediately. The brand is called Collars & Co. They make a regular stretchy golf shirt, but the top has a firm collar on it. I got rid of so many problems by upgrading to this. No dry cleaning needed anymore, and I'm free from uncomfortable long sleeves, and the collars stay stiff all day. Get 20% off using code TV at collarsandco.com.
Welcome back to Overtime. Zion's Bancorp earnings are out. Kate Rooney has those numbers. Kate?
Hey, John, so it was a miss, at least if you look at the EPS number for Zion in the quarter. It was $1.13. That was a 5-cent miss versus what the street was looking for. It was $1.18 there. We don't have a revenue number for Zion. You've got to do some math to back into that, so we're not going to report the revenue number. We've also got net interest income here. That was up about 6% in the quarter. Net interest margins 3.1%. That was compared with 2.9% or so a year ago. Provisions for credit losses also slightly higher, 18 million compared to 13 million. Some CEO commentary here saying credit quality remained in very good shape in the quarter, but he does go on to talk a little bit about trade policy and tariffs. He does say there's a very real impact potential, he says, for negative impacts from tariff and trade policies both here and abroad. We are nevertheless confident that our credit culture and practices of strong reserve positions will help them manage through some of the, he calls it, turbulence that might materialize in the coming quarters. You can see shares down here after hours. Guys, back over to you.
All right, Kate Rooney, thank you. Shares down 3% for Zion's. Market selling off today as President Trump ramps up his criticism of Fed Chair Powell in a Truth Social post this morning. The president calling Powell, quote, Mr. Too Late and a loser, quote unquote, and demanding he lower interest rates now, quote unquote. Meanwhile, Chicago Fed President Austin Goolsbee warning on CNBC this morning what could happen without Fed independence.
If you look around the world, the reason why in countries where there is not Fed independence or central bank independence, the inflation rate is higher is because when there is interference over the long run, it's going to mean higher inflation. It's going to mean worse growth and higher unemployment because there's just going to be a little less willingness to step up and do the hard things when the moment is tough.
Well, joining us now is Seth Carpenter. He is Morgan Stanley's chief global economist and previously worked at the Federal Reserve. And it's great to have you back on Overtime, Seth. I'm going to start right there with both the commentary, the rhetoric we've gotten from the president, and also those comments on our air from Goolsbee. Your thoughts on this moment, especially given the fact that technically it would take an act of Congress or maybe even, decisions by a court, not the executive branch, ultimately, to fully undermine or challenge the autonomy of the Federal Reserve.
Yeah, no, there's a whole lot there to unpack. I think Austin Goolsbee's comments were important. What is central bank independence for? Generally speaking, it's because there are choices that get made in the short run that are unpopular. So holding interest rates higher than otherwise in order to make sure inflation is closer to target when things are tough. And the Fed is now entering into a period where things are going to be particularly tough. Inflation has not come down to the Fed's target. Inflation is still too high. And we have tariffs that are going in, which we know from history push up inflation first, and then over time start to push down on economic growth. And so what's the central bank supposed to do? I think right now they're trying to balance those two competing goals. And with inflation as high as it is, we don't expect the Fed to cut at the upcoming May meeting. We don't expect the Fed to cut at the June meeting. In fact, we think the Fed might not cut at all this year because the inflation driven by those tariffs is going to be a much bigger, clear and present danger for the central bank than the slowing growth, which, as it turns out, will also be caused by the tariffs.
Yeah, the Fed's between a rock and a hard place here in terms of the data they do have and the path that we're on. Do you see the Fed not cutting because of stagflation? What happens if we tip over into a recession? Does that change the equation?
It does change the equation. I think the way I like to explain it to our clients, the way I like to explain it to folks who are interested, is the Fed's got these two competing objectives. They want inflation to get back down to 2%. On the other hand, they want growth to be sustained. They want employment to be sustained. And so how do you balance those two? I think you have to look right now, which of those two risks is the bigger cost, which is the bigger risk? And right now it is clearly inflation. Inflation has been above the Fed's 2% target for years now. Inflation was coming down and it sort of stalled. Tariffs are going to push that inflation up. Whereas we came into this year with a very strong economy. The unemployment rate's at 4.1, 4.0, 4.2%. Very strong labor market, very strong economy. And so with all the available data right now, it is clear inflation is the bigger risk. So the Fed doesn't want to cut. What would make them cut? I think you need to see growth and employment become the bigger risk. And we think that does happen at the end of this year, going into next year, as the tariffs hit the economy, as immigration restriction hits the economy. We think you will see growth and employment become the bigger risk, but only then, as we get to the end of this year and later, will the Fed start to cut.
Seth, with dollar weakness, higher yields, is this a sell America trade that we're seeing or just a pocket of turbulence? What should investors watch? What should they do?
I think it's a little bit of all of that put together, and investors just have to be super careful. The correlations that you're talking about, the dollar selling off as rates sell off at the same time, that is a bit of a pullback. Now, is it sell America? Is it pull away from America? I think it's premature to say that. I think it's a rebalancing. I think it's people looking for what is the fair value of all of the different assets. And it's hard. This increase in tariffs that we've seen is the biggest increase we've seen basically since Smoot-Hawley, and trying to sort out how in the current modern economy it's all going to play out. That's just very difficult for investors. So caution is the byword.
And so does this current economic situation make tax cuts easier, you think, for Congress to pull off, or harder?
Well, I think the Congress has a tricky situation because right now they're trying to figure out how are they even going to talk to themselves, talk to the public about how much these tax cuts cost. They're talking about whether it should be on current law versus current policy basis. And so all of that, just trying to figure out how to frame keeping the current level of taxes unchanged, I think that shows the difficulty they're having right now, trying to, on the one hand, claim some fiscal responsibility while knowing that we've got a high deficit, rising debt, and it's just a really difficult bind, I think, for the leaders in Congress.
All right. Seth Carpenter, thank you.
Thank you.
Well, we got a news alert on MongoDB. Shares moving lower in overtime after the company disclosed the resignation of its interim CFO. That's effective May 8th. MongoDB saying it plans to announce the appointment of a new CFO within the next 7 to 10 days. Well, Tesla among the worst performers in today's broad sell-off, adding more pain for shareholders who've seen the stock cut in half from the highs. Up next, former Tesla board member Steve Wesley is going to join us with a look at what's at stake when the company reports earnings just 24 hours from now.
And Citi's Scott Cronert says he's bullish about putting new money to work if your time frame is right. He's going to join us to explain overtime. We'll be right back.
At Franklin Templeton, we're always innovating. A leader in public and private markets, digital assets, and custom tax management, we're helping advisors build the portfolios of the future today. Franklin Templeton, your trusted partner for what's ahead.
Stock investors, learning to use options could improve your returns when stocks rise and turn losing stocks into winning trades. Options are now used up to 68 million times a day, proving that for many of today's savviest investors, trading stocks alone It's not an option. Our new book can show you how to become a successful options trader. And today we're giving away copies for free. Get your free copy now at itsnotanoption.com. Itsnotanoption.com.
We put our heart into everything we do. We are farmers, bakers, florists, and makers who grow and create with a passion. 1-800-Flowers, share with love.
Good morning. Welcome to CNBC Plus. Where to?
Countdown to the opening bell. Don't go anywhere.
New York for the Open.
On our way.
CNBC Plus, on-the-go access to global market data, news, and analysis as it happens. Access any market, anytime, anywhere with CNBC Plus. Start streaming at cnbc.com/plus.
Welcome to CNBC's Crypto World.
CNBC's daily digital show has trading updates, the latest headlines, a global perspective, and high-profile interviews. Scan to watch CNBC's Crypto World, sponsored by Crypto.com.
Welcome back to Overtime. Tesla, one of the hardest hit stocks in the S&P 500 today. Some negative headlines weighing on sentiment, including reports that the company is delaying the launch of its lower-cost Model Y and lowering Cybertruck production. The stock also getting a price target cut at Barclays, citing weakening fundamentals. And tomorrow, we'll get first quarter earnings right here on Overtime. Joining us now is Steve Westley, founder and managing partner at the Westley Group and a former Tesla board member. Steve, welcome. So Tesla has never probably traded on its fundamentals as a car company. So does all of this stuff matter, or does a potential shift in Elon Musk's reputation matter more?
Look, all of this matters. You can't go on forever without showing growth and profits. And look, this is a rough quarter for Tesla, and they may not have hit rock bottom yet. Big miss on deliveries, 337,000 vehicles versus an estimate of 380,000. That's a 13% decrease. And it stands in stark contrast to the rest of the world. EVs grew 29% year over year. Tesla's shrinking 13%. So that's why the share price has dropped 50% from a December high of $1.5 trillion down now to just over $700 billion. It's hard to lose $800 billion in shareholder value without investors getting a little worried. Now, analysts expect a flat Q1, revenues probably $21.5 billion. That could be lower revenues for 2025. And if you want to be valued as a flashy high-tech company, you need the growth to go with it. Punchline, Tesla needs to find a new growth engine soon.
Well, I guess part of the reason I ask the previous question, though, is there are some, including Dan Ives, calling for Elon Musk to return his full attention to Tesla. But I imagine Tesla investors might be wondering, even if he does that, if people's feelings about Elon Musk himself influence their decision to buy a Tesla, to invest in the stock, are we just living in a new reality?
Well, I think, look, for any company, Tesla or otherwise, you need the CEO to be completely focused. Tesla is facing what I call the quadruple whammy. No new product, no date for a $30,000 Tesla. You got a polarizing brand, U.S. sales down 13%. In Europe, it's a whopping 43%. They've got huge competition from BYD and the Chinese. Full self-driving is late. They've paused the rollout in China. I think they need a CEO fully focused on the company. I think if he said he was coming back, share price would go up. But Tesla's bet the farm on the robo-taxi. Right now, they've got to get government approval to get that going.
That's exactly where I was going to go with you, Steve. How much now hinges on robo-taxis rollout? And certainly Austin seems to be ground zero in some senses around that, especially if you have seen protests and boycotts and increased competition and some of these other things that we know are denting sales.
Look, I think Austin is ground zero, but you've got to remember this. Waymo got its first regulatory approval 4 years ago. That's a long time for Tesla and the others, I might add, to be playing catch up. And, now Waymo already off, moving in 4 cities already, expanding into 10 quickly, new ones coming, Tokyo and international cities in the pipeline. So Tesla's got a lot of catching up to do. I think one of the most worrisome things for me is in China, where BYD is coming out with this new, really impressive $8,000 Seagull. And it comes with the free Eye of God self-driving. Tesla charges $8,000 for their full self-driving option in China. In China, you get the whole car and the self-driving. So that's a lot to compete with. They have to kick it into a higher gear.
How much will you be paying attention to the power piece of the business, or the Optimus robots that are being developed, or the AI story in general where Tesla's concerned?
Let's break that into two. Look, humanoid robots are going to be an extraordinary story for the next decade. I don't think they're going to come to Tesla's rescue in the next 12 months. In energy, this is something we've been talking about for the last few years when I said Tesla's secret weapon is their energy division. No one else really saw that as part of the picture. It's grown from $3 billion in 2023 to over $10 billion last year. If they can keep that up, could be part of the saving grace there. But most of the batteries in Tesla's gigaboxes that they're selling by the hundreds to utilities around the world as part of their greening effort of the global grid, a lot of those batteries are made in China. And if big tariffs are slapped on those, that may give Tesla some breathing room. But both BYD and CATL, the world's 2 largest battery makers, have said, we're going to be selling our own batteries in the U.S. with our name stamped on them. We'll see how that one plays out.
Okay, Steve Wesley, thank you.
Thank you.
And shares of Tesla down 5.5%, almost 6% today. Well, time now for a CNBC News update with Bertha Coombs. Bertha.
Hey, Morgan. Nadine Menendez was just found guilty of collecting bribes with her husband, former New Jersey Senator Robert Menendez. On trial in New York City for her role in an alleged years-long bribery scheme, she was convicted by a jury this afternoon on all 18 counts and now awaits sentencing. Her husband was found guilty and sentenced to 11 years. He has vowed to appeal. President Trump will attend the funeral for Pope Francis. In a Truth Social post in the last hour, he said that he and First Lady Melania Trump will head to Rome for the funeral. Earlier today, the president praised the Pope, calling him a good man. And Duke basketball star Cooper Flagg has declared for the upcoming NBA draft. In a social media post, the 18-year-old played just 1 season at Duke, and while the team lost in the Final Four, Flagg was named a first-team All-American and National Player of the Year. Many expect him to be the #1 pick this June, following in the footsteps of Jalen Rose, Carmelo Anthony, and of course, we had LeBron, who went pro right from high school and is still playing 22 years later.
It's a good record. All right, Bertha Coombs, thank you. Up next, Citi's Scott Cronert on where he thinks the market heads next and why you might want to start dipping back into equities if your time frame is right.
And Apple seeing another sizable pullback today, now down more than 25% from its highs. We're going to tell you what's behind the latest push lower when Overtime comes right back.
David takes Prevagen for his brain, and this is his story.
Nice to meet you. My name is David. I've been a pharmacist for 44 years. When I have customers come in, I recommend Prevagen. #1, because it's effective, does not require a prescription, and I've been taking it quite a while myself, and I love it when the customers come back in and tell me, David, that really works so good for me. Makes my day.
Prevagen, for your brain.
When we're going on a large trip into the mountains, it usually starts early in the morning. I'll make AG1 or she'll make AG1. AG1 gives me energy when I'm out with the kids, climbing, hiking, camping, keeping up with them and actually surpassing them as long as I can. That's the #1 goal. And it's just a phenomenal product that allows us to do everything that we want to do.
was tired of being told no. No to my dreams.
I had no idea if anyone would buy anything.
This is so wild that I actually, from a dream, started a business.
Introducing CNBC Plus, the new streaming platform from the #1 source in business news. Watch live or on demand. Access any market, anytime, anywhere. Start streaming. Go to cnbc.com/plus now.
I'm Dr. Shannon Klingman, the inventor of whole body deodorant like Mando. It's clinically proven to block odor all day and controls odor for 72 hours. Mando's unique formula stops odor before it starts. That's my secret to better odor control everywhere.
Your hair is personal, and so is hair loss. Through Hims, you can get access to proven ingredients and simple-to-use formulas for all types of hair loss. Your prescription and any follow-ups or questions.
You need promo gear for gifting clients, customers, and your team. 4imprint.com has items certain to wow.
4imprint for certain. Welcome back. Western Alliance earnings are out, and Kate Rooney is back with those numbers. Hi, Kate.
Morgan, hey there. Yeah, so it was a mixed quarter for Western Alliance. Revenue, at least, was the number that came up short. Net revenue coming in at $778 million. That was a decrease of about 7% year over year. Missing street expectations, which were closer to $792 million. EPS did beat by a penny. That came in at $1.79. Net interest margins, 3.47%. That did decrease from about 3.48. Total deposits were up a little more than 4% in the quarter. CEO commentary here talking about the completion of some of the balance sheet repositioning efforts. They talk about deep segment expertise and the ability to adapt quickly in what they call an evolving macro environment. Also mentioning fortified capital and liquidity level positions. They say they're going to be able to maintain some of the business momentum and prudent credit risk management. Shares, you can see, down more than 4% on the earnings results, down more than 20% for the year, guys. Back over to you.
All right, Kate, thank you. Well, if you take a look at your screen right now, you're going to see CNBC's newest subscription streaming product. It's called CNBC Plus. What you're experiencing is the CNBC Plus data feed. It features an enhanced data view, the latest business news headlines. You can stream Overtime and all of your less favorite CNBC shows anytime, anywhere, on the go, and also on demand.
Well, markets kicking off the week with a broad sell-off as investors grow concerned over tariffs and Trump's hostility towards Fed Chair Powell. Joining us now on where markets could be headed next is Citi's U.S. equity strategist, Scott Kroner. Scott, it's great to have you on. And we've been teasing it so far this hour, the fact that you're actually constructive, potentially, on this market, depending on your time frame. So break that down for me.
Right, Morgan, I think it's always about time frames when we talk about equity market calls. And our view is that we're in the throes of a massive wave of uncertainty that's hitting from all sides right now. That's been reflected in the spike in the VIX index. It's been reflected in some of our ETF indicators. All told, we think we're right in this maximum period of uncertainty right now. But as you begin to project forward, whether it's 3, 6 months from now, even a year from now, we think the narrative gradually shifts and we revert back to a little bit more confidence in policy dynamics and therefore fundamental opportunity ahead. And somewhere in there, in this transition phase from maximum uncertainty to lessening uncertainty to a little bit more clarity, we think sets up for higher equity prices over the next, let's call it 9 to 12 months.
Okay. In the meantime, just given the continued selling, dramatic selling we have seen, that's been pretty broad-based if you look at just the action in the S&P, for example, today. Is this a market that is rejecting the policy push that we're getting as it currently stands?
I think with both hands you can say yes, but the way I like to describe this is that when you look at what investors are discounting when they look at the equity market, right? You're discounting said policy, known policy, the ability of companies to execute on business plans such that you can apply a normal valuation to earnings growth drivers and so that you can provide a valuation on what you think terminal values are going to be. A lot of that's out the door right now when you have this massive overhang of uncertainty, whether it's tariffs or other forms of it. I think all of this is wreaking havoc with investor psyche and is playing to the obvious. Let's step to the sidelines for now, let this pass. And I think we're in the throes of that right now.
So I wonder how far we are from an early 2000s scenario where a lot of stuff moves sideways or worse for a long time, just in the sense that you talk about how your baseline scenario on tariffs wasn't nearly as rough as what we ended up getting. How rough might be the market consequences that we end up getting if we stick with some of the rougher ends of these scenarios that the administration is putting forth?
Well, so we've tried to model that in. To your point, John, we went in thinking this year we'd get somewhere around a 10% announced tariff. You negotiate down to 5%. That would have a percentage point or 2 impact in S&P earnings trajectory, and we'd go about a normal fundamental business. When you start talking about a 20 handle as a starting point and then negotiating down from there, you take a much bigger hatchet toward our earnings growth. So we've taken our full year earnings estimate down to 255 from a previous 270. I know other street strategists have been moving that way. What that does, it gets you to a very low, mid-single digit growth opportunity from here. And in there is when you begin to bring into question the valuations you're playing. So it all feeds to the same discussion. You need to begin to lessen the uncertainty, whether it's through a negotiating tactic here, a compromise there. These are all the baby steps that are going to be needed to help this market essentially and gradually find a bottom as we go through the second quarter.
And how does the Fed's independence and the president's approach to that factor into the way you're treating the market?
I'm going to presume the Fed remains independent and they do their job accordingly. I think what we've learned about the Fed over the past several years is that they very clearly been data dependent in the way they approach their actions, right? And I don't expect them to be materially different this time. Now, in terms of data dependency, where do we think economic activity is going to take us? In our base case model, we're presuming something like very slow to no growth, maybe even a 2-quarter dip in real GDP numbers. And so somewhere in there, you're going to begin to get a little bit more decisive Fed for the right reasons. I think that's coming, and that kind of plays to where the street is sort of modeling Fed expectations for the better part of this year.
Okay. Scott Kroner, thank you. We're going to have much more on this sell-off next, including whether the market is now flashing a major technical warning sign for investors.
And we will talk to an analyst about results from regional banks Zions Bancorp and Western Alliance, both lower here in overtime after a rough day for the financial sector at large. Stay with us.
Where are all the animals, Dad?
Don't know, kiddo. Just not our day.
It's a rare thing when someone you've been with for so long finds a way to surprise you. It's like discovering E-Trade's easy-to-use platform now comes with expert insights from Morgan Stanley to help you navigate the markets.
Mom can speak walrus?
With income products from Bright House Financial, you can turn a portion of your portfolio into guaranteed lifetime income for whatever the occasion calls for. Bright House Financial, build for what's ahead.
Is this your dream of retirement? How about this sweet deal? I like fishing. Or is this a little more your style? Retiring well isn't a guarantee, it's a goal. It's easy when markets are going up. But what about when they're not? That's why you need this.
Call for Fisher's Retirement Survival Kit, featuring your guide to surviving market volatility, our stock market outlook, plus the Fisher Investments Difference. 3 indispensable guides, yours free for calling 1-800-213-5317.
Fisher Investments' disciplined approach will help see you through the market's ups and downs and give you the confidence you need to reach a comfortable retirement. And our fees are structured so we do better when our clients do better.
Call now for your free retirement survival kit. 1-800-213-5317.
See if your dream retirement is on track.
If your portfolio is $1 million or more, call Fisher today. Call 1-800-213-5317.
If you're looking for the one, find the home with a short commute to work. Find the one in a great school district. And find it exclusively in professionally sourced listings. Download the Realtor.com app today.
You've got a subscription for streaming movies and music, maybe even one for food.
But what about when it's your water line that's streaming? Repairs are expensive. Good contractors, hard to find. A plan from HomeServe is like a subscription for peace of mind. For one small monthly fee, when a covered system breaks, we'll send a qualified contractor and pay for the repair. Why worry? Get HomeServe and chill.
Plans from HomeServe start at just $4.99 a month.
Call 1-833-812-2141 or visit homeserve.com.
You make it through security so fast, the agents applaud. Your travel itineraries are so well written, they're on the bestseller list. And you have access to lounges that don't officially exist. That's why you rent with National, where you can skip the counter and choose any vehicle on the Emerald Isle. Because travel isn't a competition, except that it is. And you're winning.
Welcome back to Overtime. Stocks getting crushed today in a broad-based sell-off with every sector closing down 1.3% or more. Joining us now to assess the technical damage is Katie Stockton. She is founder and managing partner at Fairlead Strategies and a CNBC contributor. Katie, welcome. So the S&P closed right at this long-term support level, and we are barely into earnings season. What should investors watch?
Well, of course, we want to see the support level hold. The level we're watching is 51.26, and it's based on a Fibonacci retracement level. If broken, that level would then target about 4,500, again, based on those Fibonacci's. So we really want to see this support level hold. And for us, that means on a consecutive weekly closing basis, we see the level intact still. So it's not an intraday breach of support that we worry about, or even an intra-week breach of support, because that can be treated as just noise. But I will say that today's action was not good. The close could have been worse, but it did take the S&P 500 down from a very brief consolidation phase from last week. And it also is generating a bearish whipsaw in the daily MACD. If we see that confirmed tomorrow, it would increase the risk of a harder retest of support.
How about what we're seeing in gold, in Bitcoin, in yields? Do you look at those when you look at the likelihood that the charts are going to do something unfortunate?
Well, we do. Every morning we're checking all of the above. Bitcoin in particular, we do look at as typically a risk asset, and that's what long-term correlations suggest. But there are times, of course, at which it is more correlated to gold, and that's been topical lately because both gold and Bitcoin are somewhat tied to the dollar. So Bitcoin did rally, got pulled away from its 50-day moving average, and is now into some resistance. It's around 88,200 to 88,800. A breakout above that level would not only clear the 200-day, but also some resistance, and then would suggest that we get a little bit more upside follow through near term from Bitcoin, which is particularly relevant for those who are looking for a better exit. For the price of gold, of course, a very different chart, but the recent correlation has been there with Bitcoin as the dollar has weakened. And the gold chart is very strong. The uptrend still has momentum across time frames, and yet we have no way of deriving an upside objective based on the current trading. So the way we just kind of stay on the right side of the trend is by watching the moving averages. And for one, I like the 20-day moving average. It's pretty tight to the trend, and when it starts to roll over, we tend to see some consolidation develop.
Yeah, I've seen a couple of traders today reference that gold chart as going almost parabolic in recent trading sessions. Given the fact that whether it's gold or whether it's Bitcoin or even whether it's the SPX right now, the weakening dollar and just how quickly it's been weakening certainly seems to be impacting investor sentiment more broadly. How closely are you watching that chart? And I guess what would you need to see there to know that maybe this is not turning into an uglier situation?
It is pretty wild, the downside volatility from the dollar index. You would expect something a little bit more like a grind lower, but indeed it's taking out two tiers of support on the chart. So the dollar index does have a major breakdown pending confirmation. At the same time, we have some short-term counter trend signals that we are watching very closely. They're shared by the euro on the flip side. to suggest that we'll see a little bit of a relief rally for the dollar. That was not happening today. It was not confirmed, that signal today, but the likelihood is still there for that relief rally. It appears very overstretched to the downside in the same way that you could argue that gold appears overstretched to the upside. It's not usually reason enough to either add exposure or reduce exposure until you see those moving averages turn.
All right, Katie Stockton, always great to get your insights. Thank you.
Of course.
Well, the trade war keeps taking a toll on shares of Apple, and another Wall Street firm is slashing its price target on the stock. We've got those details straight ahead.
And what's in your wallet? Check out Capital One and Discover, two big winners in a sea of red today after the Office of the Comptroller of the Currency granted conditional approval of their more than $35 billion merger. We'll be right back.
Nuveen invests with the foresight and vision to anticipate the needs of future generations, to build strong portfolios that deliver lasting legacies, to innovate and adapt for what's just around the corner. Because after 125 years of yesterdays, Nuveen knows your ultimate stakeholder is tomorrow. Nuveen, invest like the future is watching.
No application fee if you apply by May 30th at University of Maryland Global Campus, an accredited university that has transformed adult lives for more than 75 years. You're not waiting to win. You're ready to succeed again at umgc.edu.
The thing about work, it's always changing. But with the right perspective, what seems confusing or just out of reach can suddenly fall into place. If it's a work thing, it's a SHRM thing.
SHRM.
Out here, you'll find a community of hardworking creators with loyal followers, along with proud moments worth sharing. And farm to table, well, that's just supper. And whether it's a raised garden bed, acres of land, or something for your animals, we've got all the supplies and are happy to share a little know-how.
Welcome to Tractor Supply, into life out here.
Introducing CNBC Plus, the new streaming platform from the #1 source in business news. Watch live or on demand. Access any market, anytime, anywhere. Start streaming. Go to cnbc.com/plus now.
I'm a supermodel. I used their Baked and Brighten like foundation powder, but I used it over the spackle primer. It was sick. Their squeezy blush and then their In the Buff lip. I'm a model.
These bills are crazy.
She has no idea she's sitting on a gold mine.
Well, she doesn't know that if she owns a life insurance policy of $100,000 or more, she can sell all or part of it to Coventry for cash, even a term policy.
Even a term policy?
Even a term policy!
Find out if you're sitting on a gold mine. Call Coventry Direct today at 800-476-0100 or visit coventrydirect.com.
I got this KitchenAid stand mixer for only $56.
DealDash.com. Online auctions since 2009. This PlayStation 5 sold for only 50 cents. This iPad Pro sold for less than $34. Go to DealDash.com and see how much you can save.
Welcome back. Apple shares getting crushed again today, and they're now down more than roughly 14% so far this month. Steve Kovac has the latest on what's been dragging Apple down. Steve.
Hey, Morgan, it's more of the same and more of that dour commentary around Apple today. The big one getting a lot of attention is from the analysts over at MoffettNathanson. They're piling onto their sell downgrade from back in January and lowered their price target to $141. Those analysts are saying this morning we might see a pull forward in sales from Apple early this year as folks kind of bought ahead of the tariffs in anticipation of them hitting in April. But after that, that, things are going to get a little bit worse. They're saying Apple has to face the 20% fentanyl tariffs, that's what they call it at the White House, against China, even if it's getting a pass for now for those products made in Vietnam and India. On top of that, there are concerns over the global economy, meaning people would have to wait longer to upgrade devices if things really take a downturn. And then it's the same story we've been hearing pretty much all year out of Apple. Before those tariffs were even really in the conversation, we had Apple failing to ship the AI Siri update, which was supposed to be a catalyst for sales. And we saw iPhone sales estimates go down at many firms because of that. Not to mention Huawei over in China keeps eating into Apple's market share. Look at those numbers right there. You can see it right in front of you. And one thing missing from the commentary today, at least on the bright side of things in China, the Chinese government subsidies for electronics and the cheaper iPhone 16e model may have provided a boost. We're going to get our first real taste at how Apple's dealing with all of this next week when they report earnings on Thursday. How they're going to respond to tariffs are going to be the number one thing the street's going to be paying attention to. John, I'll send it over to you.
All right, Steve, thank you. Well, two regional banks pulling back now in overtime. Zions Bancorp and Western Alliance down almost 6% and 2%. We're going to talk to an analyst about those results when we come right back.
Brian, it's me. I mean you. Wake up. Come on, man. You got to tell employers to take another look at all the benefits they're offering. Everybody wants to build the best team, and offering Aflac can help attract and retain that top talent. You know we like that top talent. And listen, I mean, you got to listen. Aflac gives employees cash to help with unexpected medical bills. It's prime time to add Aflac.
Request a call today at aflac.com/prime.
Sail through the heart of historic cities and unforgettable scenery with Viking. Unpack once and get closer to iconic landmarks, local life, and cultural treasures. Because when you experience Europe on a Viking longship, you'll spend less time getting there and more time being there. Viking, exploring the world in comfort.
At Baird, we have investor relationships in 35 countries and market expertise in over 40 industry verticals, all to help make the most important investment connections of all, yours. Discover the Baird difference at BairdDifference.com.
ChemDry has been a trusted name in carpet cleaning for over 45 years. And for good reason. ChemDry uses the perfect combination of nature's chemistry, along with our core cleaner, the Natural, to provide a deeper, longer-lasting clean to your carpets, area rugs, and upholstery. Millions of carbonating bubbles remove the dirt, allergens, and stains from deep within your surfaces, giving you a healthier home. Call 1-800-ChemDry or visit chemdry.com. ChemDry, the healthier, deeper carpet cleaner.
Hands-free Skechers slip-ins now come in Glide Step Max cushioning. This actually gave me an idea to combine all my favorite sports into one. White Eddie, son! Carpath only. Try Glide Step Max cushioning hands-free Skechers slip-ins.
You want to be a better investor? Join the club.
My investment strategy has changed since joining the club. I feel like I'm always on top of things because I know Jim has my back.
Get invested. Join the club today. Go to cnbc.com/join Jim.
Welcome back. Shares of Zions Bancorp and Western Alliance both lower here in overtime after reporting quarterly results. The regionals ETF KRE is down 16% so far this year, but is coming off a strong week of gains. It's best since January. Joining us now is Baird Senior Research Analyst David George. David, it's great to have you on. I'm actually going to start with some of these results and how it fits into what we're hearing in general this earnings season, specifically from Zions, where it seems like they reiterated their credit quality and excuse me, where they reiterated their credit quality and basically said they're in very good shape and did reference the uncertainty of tariffs.
They did. Good afternoon. And Zions is kind of bringing up the rear for bank earnings season for us. We're finishing earnings season over the next couple of days. I think Capital One is tomorrow after the bell. But Zions, from our perspective, Morgan had a relatively good quarter. They met our expectations as well as the streets for what we call pre-provision net revenues, or PPNR, and they were in line with our number as well as the consensus. The outlook was maybe a little lighter, and that's a function of just maybe a little more subdued expectations, Morgan, around loan growth, as well as a little lighter outlook as it relates to fees. But as you mentioned, credit quality was good. Expectations, we think, were relatively low with the stock at just over book value, and I think the 6% down reaction probably lessens quite a bit by the time we open tomorrow morning.
David, are we yet seeing a clear impact or expected impact of the macro situation on the regionals?
We're certainly seeing in the stocks, and the first quarter numbers, John, have been good. Loan growth has picked up, and interest margins have shown improvement. Capital is good, but as you said, those numbers, while very good and on an absolute basis, they're really old news, and now everyone's focused, market participants are focused solely on the tariffs and the implications of those tariffs on credit quality as we go through the balance of the year. We've obviously seen some gyrations, John, as well in the bond market, and there's some implications around that. So clearly, the future is uncertain at the moment. The stocks, fortunately, are trading, we think, at relatively discounted multiples, and the risk-reward trade-off today looks much better, actually, than it did after President Trump was voted in office, given that move in the stocks downward.
With a green light happening, at least from a key regulator here in the U.S. for this Discover Capital One deal to move forward, do you expect we could see more M&A among the regional banks here, especially if we get more deregulation?
Yeah, I think the hopes, Morgan, is that we do get more bank M&A. I think that the move down in the stocks, I think, potentially may curb that activity or curb the enthusiasm around bank M&A in the near term. And that's just a function of the fact that a lot of these management teams would be unwilling or less likely, I should say, to be willing to sell at these prices. But the arguments for bank M&A are clearly there. There is a need for scale. And the big banks have gotten much better on the street from a day-to-day competitive and blocking and tackling perspective. So from our standpoint, there is a very compelling argument for bank M&A. And we're hopeful that we get some clarity around tariffs, a little more clarity around deregulation, and the stage is set, we think, for more bank M&A activity going forward.
We'll look for it. David George, thank you.
Thank you.
Well, Morgan, I keep thinking about Katie Stockton and that long-term support level in the S&P that we are just above right now.
Yeah, we're going to keep watching that. Meantime, we get more earnings tomorrow. Tesla here in overtime. But that's going to do it for us here for overtime.
Fast Money starts now.
Live from the NASDAQ market site in the heart of New York City's Times Square, this is Fast Money. Here's what's on tap tonight. Another Monday sell-off. The major averages slump while the dollar continues its slide. And with the president ramping up his attacks on the Fed chair and the bite of tariffs taking hold, is there a catalyst out there that can kickstart a rebound? We'll debate that. Plus, is the record-breaking run in gold the ultimate sell America signal? Should investors be more and more worried as gold rises higher and higher? We'll go inside the numbers. And later, the options action on Tesla ahead of tomorrow's results. Ugh, that's what shareholders of Deckers are saying about the stock right now. And why is one Wall Street firm actually bullish on Disney right now? I'm Melissa Lee, coming to you live from the studio B at the NASDAQ. On the desk tonight, Tim Seymour, Karen Feinerman, Dan Nathan, and Guy Adami. We start off with stocks going back into sell-off mode to start the week. The S&P dropping 2.4%, touching its lowest level since April 9th and back down 12% for the year. The Dow dropping more than 1,300 points at its lows of the day, and the tech-heavy NASDAQ leading the losses with more than a 2.5% decline. But major indices all close off their worst levels of the session. Meanwhile, Treasury yields headed higher with the 10-year yield back above 4.4%. The dollar touching its lowest in more than 3 years, and gold hitting its 24th record of the year, above 3,400 for the first time. All this as tariff policy and the president's attacks on Fed Chair Jerome Powell throw the economic outlook into more uncertainty. But even with all the recent volatility, we're just about where we were a year ago. So what does this action tell you, Guy?
Well, the stock market's definitely the star of the show, but behind the scenes, it's what's going on. Tim's talked about Karen, Dan. It's the weakness in the U.S. dollar, which, by the way, should be alarming a lot of people out there. I mean, the move the dollar's had over the last couple of weeks has been historic. Dollar-yen below 141 should be flashing red lights the same way they flashed over the summer, August specifically. And the bond market is clearly a story because people, I think, are starting to question the whatever of our U.S. debt and our U.S. dollar, and I think they're fleeing it, and you're seeing it. People now are trying to get short the U.S. dollar through any vehicle they can, and they're selling their treasuries like yields are headed back to 5%, which, by the way, I think they are.
All of this was in place for weeks, maybe even months, in terms of the downward pressure on the dollar, as well as downward pressure on bonds themselves, yields higher. But with this call, the repeated calls for Fed Chair Powell to leave or be kicked out, that puts more uncertainty under this whole thing.
Absolutely, for sure. I think that more than anything else, I mean, the tariff stuff we've worked with, that's been in the place for, since Liberation Day or even before Liberation Day. But this rhetoric being ratcheted up significantly to get rid of Powell, I think, is very destabilizing, counterproductive. And so it's interesting. We think, where were we a year ago? Bonds weren't that different from here. Maybe we were entering about the stage where the Fed had stopped tightening. They were on neutral for a little while, heading to cuts soon. And it seemed like AI was very different then. So this is a lot of the things the same, but it feels very, very different. Yes.
Well, it feels like emerging markets. And to me, again, I'd take stocks, bonds, and the dollar all going down in the same day. This is the stuff that I did for years. We had Steve Leisman on Friday, and he kind of stole my metaphor to, are we Turkey? And with all due respect to a fantastic country with great food and a great part of the world, but we don't want to be seen as having the same economic, political, and really, unfortunately, conflicted central bank dynamic. And that's kind of the story. I mean, an independent Fed is one of the tenets of our capital market system, frankly. And even those that feel, and I think many of us do, and certainly there have been times it's obvious, the Fed has overstayed their welcome in our markets since the financial crisis. And I think Scott Bessent's one of these guys. I think, these are also, I think, times to point out just how important it is for the central bank to be where it is. Back to the equity market, we're within 3% of the closing low on the S&P, so we've come down. Last week you had those bear crosses everywhere on the NASDAQ and on the S&P, and they're real. And again, that downtrend from February 21 is one that I think, until proven otherwise, is the trend that you're following. And we're just getting into earnings season. So we've had 15% of the S&P. And while I think we can all say that probably that first quarter, especially with some pull forward, was pretty decent, I think this is the part of this that really could possibly, usually you wait for earnings season to give you that backstop to get back to fundamentals. But we know we're not going to hear anything great out of guidance.
Yeah, so it's not just, to me, about the economy and what's going on in the markets right now. It's anything. Just pull open the Wall Street Journal, the Washington Post, the New York Times, Bloomberg.com, CNBC. It's like a deluge of stories that actually don't all have to do with the markets and the economy, right? There's just no shortage of things that there is an attack on the norms. And, you could say that's political, but it's not. Look at the Washington or the Wall Street Journal. It's owned by Rupert Murdoch. There was 10 stories over the weekend that are really attacking the processes in which this government is kind of like looking at things. And, there was an article that really hit me today. It said Trump is everywhere except in the economic data. And it's talking about how the data is not reflecting what's going on just yet. And so what Tim just said about the quarter, it's baked in the cake, right? And then the guidance, it's just as clear as mud. And then when you think about just what is the sort of headline that could cause some sort of ease in the economy or the markets, I'm hard pressed to see what it is right now. I really don't aside from them saying, hey, we're just kidding. There's going to be no trade war and we're not putting tariffs to the extent that you think. But I actually think that would be really bad at this point. It'd be bad for our credibility. It'd be bad for our standing in the global order here. And so it's a really bad place because all of the sorts of, plays in the Fed's playbook that he's being attacked for actually may not work in this environment right now. You know what I mean? Like usually if you have an economic crisis or whatever, you lower interest rates. And I think that's what you're suggesting about, like third world or Turkey or that sort of thing. So I think we're in a really tough spot here. And the market, I think, is yet to really reflect that. If you think about an S&P that's only down 15% in the year.
And then you layer on, you mentioned the AI story was very different compared to a year ago. Morgan Stanley had a report saying that the hedge funds de-risked to the lowest exposure to the Mag 7 in 2 years. I mean, they were selling Monday through Wednesday of last week. $60 billion. So,
Well, I'm always long, so I have Mag 7 exposure. some collars
have less?
in place. I have less, some because it's self-hedging when it goes down. And then I have some I have no Apple, it's all collared. NVIDIA is 40% collared, but then the rest is down. I like Amazon. I like Meta. Google, I like as a valuation, but I am concerned about the antitrust situation there. So, I'm always looking for things to buy. And with the VIX here, we talked about it a lot over the last few weeks, between 30 and 40 is really limbo. It's no man's land for me. So I think we were, I don't know where we ended up the day, maybe 32 something or other, but hit 36 maybe. Still limbo there. I'd like to have, as you said, clear as mud. I'd like to have some clarity, which we will not get during earnings. But I do think, though, a reversal on tariffs would be a big benefit to the market.
It did feel like a very peaceful vol day on a day that wasn't a peaceful vol day. And yet it really, I think the market is in a mode here where I think people are accepting of the uncertainty and the drift lower. And Mel, your comments on positioning around the Mag 7, normally I would respond to that and say that's actually kind of bullish, right? If you think about the market and positioning, if you've seen all the big hedge funds de-risk, take those positions down. CTAs, which usually follow or trend followers, have done the same thing. But I think the question we came into all this was, what are the multiples on these companies and what should they be trading at? And I think it's going to be very important to hear about that AI CapEx, but I do think we're at a place here where the S&P is certainly not priced for recession. A recession that I'll say is not happening tomorrow. I was reading a great report by Bruce Kasman of JP Morgan, who I think is one of the best, and he said, coming out of the first quarter, you have a dynamic here where, look, the data and the outlook was very resilient, very solid, and there was some pull forward nature to March for sure. But the recession dynamic that now, I don't know where we are in probability, and depending on who we're asking, strategists, economists, market players, but it's not going to happen immediately. And that's the thing about this that's a little bit troubling to me. This all plays out over time. And it'd be one thing if we just stuck a stick in the bicycle spokes guy.
What you probably did as a kid, laugh when people flew off their bike. Yeah. Well, no, I never did that. I was the guy that helped the person up off the ground after you put the stick in the spokes. But
Thank you.
So, at a certain point it comes math, right? And what's the right multiple for the environment that I think we're in or going into? Historically, an 18 multiple for the market is not unreasonable. That's probably a little bit actually north of historic norm. And what about earnings are we going to have? It's not 274. I think we all probably agree on that. It's probably something closer to 250. Now, there are people watching that and saying, you know what, Guy, it's not that simple a math problem. And you're probably right. But to a certain extent, it's going to be that simple. And that gets us down to 4,500. So you can make an argument that fair value is probably still about 600 or so S&P points away.
If you're assuming that the multiple is 18.
You can make an argument that the multiple can be lower than that.
Right.
We've seen in the low teens as well. Yeah.
All right, let's just go back to 2021 to 2022. By no means we're you can compare these sorts of situations because that sounds like a very orderly sort of sell-off. There was a lot of excess in the market, and you had NFTs and crypto and SPACs and all that sort of stuff. So at one point, the S&P was down 30% of the year, closed down about 20%. The Nasdaq was down about 40%, closed down about 33%. So here we are right now. Guy just mentioned that 4850 level. That was the high in 2021. Take 1,500 points, go down to your 4,500. What's the E going to be? At some point, the stock market is going to discount essentially where we bottom out. I just don't think a PE is a reasonable way to kind of think about what's going on in the market. So this feels like really bad relative to me to 2022. Now, I don't think you press it here. I think you sell rallies. I think it's one step forward, two steps back, and I don't think we're going to get any clarity on the tariff stuff probably for about 4, 5, 6 months.
Well, executives from some of the country's biggest retailers, Walmart, Target, and Home Depot, meeting with the president this afternoon about tariffs. For the very latest out of Washington, let's get to Megan Casella at the White House. Megan.
Hey, Mel, that's absolutely right. The CEOs of all three of those companies here this afternoon to meet with the president, and I am told that tariffs were on the agenda. Just in the last couple of minutes, I got this readout from the president via a White House official, the president saying that it was a good meeting with the biggest retailers in the world, confirming that the discussion included tariffs. The president also says the meeting went very well and that it was an honor to have them in the Oval Office this afternoon. Now, all three companies, I should say, also put out statements as well, mostly calling it a productive and a constructive meeting. And Target specifically also said that they discussed, quote, the path forward on trade. Now, Melissa, remember, this does come as the president has said in the past that he'd be willing to talk with companies about tariffs. That's, of course, as negotiations with foreign countries are ongoing as well. The president in the past had said he might not be so rigid when he talks to companies, suggesting there that maybe there was some discussion about exclusions or exemptions in the Oval Office. So that's what we'll have to be watching over the next few days or weeks. We'll see if there's anything more specific to come out of this meeting, whether any of these companies might get some sort of wins on the trade front in terms of some of their products being exempt. Melissa?
All right, Megan, thank you. Megan Casella at the White House for us. I mean, it is positive that they are talking with the president as to whether or not anything actually comes out of this. Who knows? But in terms of the tariff exposure retailers, I mean, that's undeniable.
No, undeniable. Communication is always a good thing, right? But, I mean, to your point, is it going to fall on deaf ears or will something come of it? Maybe. I mean, listen, President Trump watched Jamie Dimon speak to Maria Bartiromo a week and a half or so ago, and he made a decision to sort of ratchet things back based on that interview and based on what happened in the bond market the night before. So if somebody says something compelling to him in this round of talks, I mean, maybe you'll get a little acquiescence on the back end over the next couple of days.
It's interesting. I don't know if, we avoided the shutdown of the government. The Democrats sort of caved and sort of are in this interesting strategic position of anything that goes wrong now with the economy is on the Republicans. So that, I think, adds a bit of extra pressure for them to come to some resolution, I think, somewhat quickly. And then also, I guess that will allow them to move on to the other parts of their agenda.
Right.
A little bit later in
tax cuts.
Yes.
Let's get more on President Trump's attacks against Jerome Powell. In a post on Truth Social, the president called the Fed chair Mr. Too Late and a quote-unquote major loser, saying that, quote, there can almost be no inflation and calling on him to lower interest rates. For more on what it could mean for Powell's future and the independence of the Fed, former Cleveland Fed President Loretta Mester joins us now. She's also a CNBC contributor. Loretta, great to have you. Great to get your perspective on this. I mean, nobody in the economic world says that this is a good thing, and certainly we're seeing in the reaction to the markets. But in terms of what this could lead to, I mean, we get a flavor of it in terms of the bond, what we're seeing in the bond market in terms of the dollar. Is it too much of a leap to say that we would be on the path to becoming Turkey? I know there's a difference because they had 4 central bankers in 2 years, but this is the United States of America, the world's reserve currency, the world's safe haven in terms of the treasury market, and we're acting like this.
Yeah. Well, I think the president's, comments on firing Jay Powell and before his term is over certainly aren't helping in terms of clearing up any uncertainty. It's adding uncertainty on top of uncertainty that we had with the tariffs. So it's not helpful for the economy, and you see the reaction in the financial markets, as you just pointed out. But it's also not helpful for the president's own legacy, and I have to believe that at some point he'll understand that, his advisors will tell him that, and that he can sort of complain about policy but not threaten to do things that really upend the institution and the institutional underpinnings of the Fed, because everyone who's ever researched this, if you look at other countries, you really want to have a Fed or a central bank that is setting monetary policy that is really focused on the goals that their legislator has given them, and in the Fed case, it's the congressional. Congress has given them its goals. So you really want that to be the focus. And I am 100% confident that Jay and the Fed are going to look past and look through all this, what the president is doing in terms of saying he wants to fire, and really stick to the minuting of promoting price stability and maximum employment. That's their job. That's what they do. That's what they work hard to do, and that's really what their focus is going to be. And all this other stuff is adding a lot of uncertainty to the economic outlook, which makes their job harder. But I also think that it's undermining the president's own economic agenda and his own credibility in terms of his economic agenda. And at some point, I think that'll be realized by the administration, and they'll understand that this kind of attack on Powell is not helpful in any case to any agenda. And so I think that is where it's going to be. But in terms of what the Fed is going to do and what Jay's going to do leading the Fed, they're going to stick to their job. And their job is to take into account what's going on in the economy and that includes what's happening in financial markets, of course, but also the bigger picture in terms of what's coming in terms of policy, and really focus in on what's the right monetary policy settings to make sure that we have inflation coming back down to 2%, and we have, as much as they can do with an interest rate tool, cushion this big, pretty traumatic change in the regime, right? So this isn't just a little bit like we're going to have some cyclical stuff going on. It's really a fundamental change in the trade policy and the way the U.S. trade policy interacts with the global trade system. So the Fed has some tools that it might be able to cushion against some of that. But right now, it's trying to balance both of those goals. And that's what they're going to be focused in. They're not going to let this stuff distract them from their really important mission.
Hey, Loretta, it's Karen. Thanks so much for being on. Obviously, we know you have the dual mandate of maximum employment and price stability. But does the market volatility ever weigh in on that to the extent that it can destabilize the labor market or the economy more broadly?
I mean, there's two parts of that. One is, are the markets actually functioning, right? Are they finding prices? Are there trades being done, right? And so far, from what we can tell, right, that the markets are functioning. We may not like the way they're going, but there's trades being done. And so there isn't a market functioning issue at this point from what we can see. But you're right, in terms of financial conditions, if they're sustained and long enough and, in a particular direction, they will influence the outlook for the economy. And so, we've already seen how uncertainty can influence the economy, right? People are pulling back on investment. If you're a business, people are pulling back on discretionary spending, and, getting prepared, a little bit more savings and spending. Same thing can happen if you see that your wealth has gone down, your 401k, and you look at the statements and you see, oh, wow, I have less there than I thought. I better start saving up again for a rainy day. That can affect the economy. And that'll be taken into account when the Fed sits down and thinks about, their outlook for the real side of the economy as well as what's going on in the inflation side.
Loretta, thanks for your time. Great to see you. Loretta Mester.
Thanks, Melissa.
Well, what I heard Loretta say is, in a world of an independent Fed, and that's the world we live in, inflation is so much more important, and staying anchored long-term towards that means you are going to run the risk of, again, if being late means supporting the economy or supporting markets, I think this is a good place for the Fed to be. And again, I think this is a place that a lot of market participants want the Fed to be.
Yeah. Bye.
Feels as though if President Trump wanted him out, we'd be in the works right now. So I think he understands. Enough people probably told him that would be catastrophic. So I think he'll just sort of resign himself to browbeating him and trying to embarrass him on social media. I think that's what we're up against right now. But I think he understands the ramifications for going down that road.
Yeah, I just think the administration has to make a better case why lower rates fixes anything that's going on right now, because they have not done that just yet. And so to me, you can compare us to what's going on in Europe. It's a very different situation in Europe. We are picking a fight with all of our major allies and our biggest adversaries. And I don't know how you get this thing fixed. I think it's weird that we don't have a deal with Canada or Mexico or EU right now. I think they're all waiting to see just how much we will blink. And going forward, if he can't get this thing done with Fed Chair Powell, then he's going to try some other tactics here. They're just not going to cave.
And really quickly, short end is where the Fed controls rates. Long end, by the way, that 10-year is within a whisper of the intraday close on the day we were all fearful of that 10-year auction. So rates didn't have a good day.
Coming up, the countdown to Tesla earnings is on, and the action in the options market is revving up around the EV maker. How those trades are playing the results next. Plus, Uber hitting the brakes as the FTC cracks down on the rideshare company's billing practices. What the latest blow to big tech could mean right after this.
This is Fast Money with Melissa Lee, right here on CNBC.
At Morgan Stanley, old school hard work meets bold new thinking. Partnering to unlock new ideas, to create new legacies, to transform a company, industry, economy, generation. Because grit and vision, working in lockstep, puts you on the path to your full potential. Old school grit, new world ideas. Morgan Stanley.
your kid's brain and the math quiz. Some allergy medications can make your kids drowsy, but Allegra is different. Well done.
Allegra is fast, non-drowsy allergy relief with 0% brain interference. It's a no-brainer.
He sure knows these parts well.
Folks say the planes whisper to him.
Outlaws in 500 feet. Rerouting.
Making a left!
Innovation changes everything.
Man, he's good.
With one investment, you can access the NASDAQ 100 innovators who are rethinking the world. Before investing, carefully read and consider fund investment objectives, risks, charges, expenses, and more in prospectus at Invesco.com.
So handsome.
I can't buy this.
Whoa, whoa. Your Empower investment account has grown. You earned it. So, get good at money so you can be a little bad. Empower.
Welcome to CNBC Plus, market destination.
CNBC Plus, on-the-go access to global market data, news, and analysis as it happens. Start streaming at cnbc.com/plus.
I got this $1,000 camera for only $41 on DealDash.
DealDash.com. Online auctions since 2009. This PlayStation 5 sold for only 50 cents. This iPad Pro sold for less than $34. And this Nintendo Switch sold for less than $20.
I got this KitchenAid stand mixer for only $56. I got this barbecue smoker for $26.
And shipping is always free.
Go to DealDash.com right now and see how much you can save.
I'm a supermodel. I used their Baked and Brighten like foundation powder, but I used it over the spackle primer. It was sick. Their squeezy blush and then their In the Buff lip. I'm a model.
With 4imprint, you get more than promo products. You get the certainty of personal service, design expertise, and unmatched quality to make your moment shine. Be 4imprint certain at 4imprint.com.
4imprint for certain.
Welcome back to Fast Money. Tesla tumbling as investors prep for earnings tomorrow. Barclays cutting its price target on the stock to $275 from $325, citing a confusing setup ahead of the report, weak fundamentals, but potential positives from a more engaged Elon Musk in its full self-driving event. Options traders are getting creative with how they are playing the results. Mike Coe joins us now with the action there. Mike.
Yeah, creative. I wouldn't say overly optimistic, at least not when we're talking about the options on Tesla's underlying shares. So we saw put volume outpacing call volume pretty considerably today. The most active options where we saw the most premium spent were the weekly 225 puts. There was over 48,000 ultimately by the end of the day, of those trading around $12 a contract. That's a lot of bearish premium. Usually over the last 20 days, we see calls outpacing puts, and that trend has been dwindling over time. Now, there's also a 2 times levered ETF that trades on Tesla, and here this thing is down over 80% off of its highs, but here there is a little bit more optimism, probably a function of the instrument itself just being levered to the upside. There we saw buyers of the 7 strike calls paying about 53 cents. That was the most active contract there. But in general, I would say that there's a lot of skepticism and some concern maybe looking into earnings.
Yep. Mike, thank you. Mike Coe with the action there. One of the biggest bulls on the street, Wedbush's Dan Ives, says Musk needs to resign from Doge, or at least provide a firm timeline as to when that will happen. He needs to disengage from there because there's been brand damage. We've been talking about this brand damage aspect for quite some time.
Elon said something interesting on the last call. I guess he got a lot of questions about, all the time that he's spending on all these different things. He wasn't at Doge just yet. And he says, I go to where the problems are. Well, let me tell you where the problems are. In their auto gross margins, they're expected to be like 12.5%. That's in line with General Motors. This is down from 30% or so 3 years ago. So they got the brand degradation. They got a whole host of other issues here. And a lot of folks who are bullish on the story, they're kind of throwing out 2025. If you want to throw out 2025, then the stock shouldn't be trading here because you're looking forward to Robotaxi and Optimus and all that exciting stuff where we know that you have to take the over. So again, I don't know how they get out of this hole because the brand degradation is not just here. It's also in Europe, and they're going to have some problems in China because he's got a lot of issues in China as it relates to, all these different levers that they could pull with him one way or another.
And the competition there is extremely fierce, yeah.
Throw on top of that a slowing economy, higher interest rates, which, by the way, when rates were at their zenith a year and a half or so ago, Elon Musk actually talked about how high rates were hurting Tesla, and it all adds up to me to a stock that's challenged. Now, Maybe you're pushing against something here at 220, which sort of was a recent low. I don't know. But if you'd start to do the math, I mean, it's not unreasonable to think in a bad market this could trade 165, which was another prior low a while back.
Something real quick. There's also now at least some word out there that there could be a delay in the low-cost line, or in other words, something that was very bullish, that a more affordable Tesla, a more kind of Tesla for the masses may be delayed. That won't be good news.
Yep. We've got breaking news here on Harvard University suing the Trump administration. Megan Casella is at the White House with the very latest. Megan.
Hey, Mel, that's absolutely right. Breaking just in the last few minutes, Harvard is suing the Trump administration in federal court today, arguing that the administration's attempts to freeze multiple billions of dollars in federal grants are unconstitutional and illegal. They're asking the court to freeze or overturn or reverse any attempts to halt that funding. Now, Harvard's president, Alan Garber, says in a statement that the administration's actions are, quote, unlawful and beyond the government's authority. And this, of course, comes after the Trump administration was leveling a series of demands on Harvard over concerns mostly centering on anti-Semitism. So in the suit then, Harvard writes, make no mistake, Harvard rejects anti-Semitism and discrimination in all of its forms, is actively making structural reforms to eradicate anti-Semitism on campus. But they go on to say, rather than engage with Harvard regarding those efforts, the government announced a sweeping freeze of funding for all sorts of things, nothing at all to do with anti-Semitism and Title VI compliance. Now, Melissa, of course, amid a very tense time between the Trump administration and higher education institutions all across higher education, this is really the first and the most significant pushback that we've seen from any institution, with Harvard now suing the administration in court. Mel?
Megan, thank you. Megan Casella. And as Megan mentioned, a lot of standoffs between higher education institutions, like at Columbia, right in our backyard here, and the Trump administration, with a lot of the universities feeling the pressure to submit to the Trump administration in terms of their requests in order to preserve funding. Harvard's making a stand here.
Well, no one is in a better position financially
the coffers
than
absolutely.
Harvard, right? So, I mean, if there's anyone to do it, it would be Harvard. And interestingly, it's also a good sort of choice for Trump to pick as an elitist institution. And, you know, so it checks a lot of boxes on both sides. It'll be pretty interesting.
Yeah. There's a lot more fast money to come. Here's what's coming up next.
Uber slamming the brakes as the FTC cracks down on the rideshare giant. Inside the lawsuit and the latest shock to big tech. Next. Plus, more signs that the Sell America trade could be here to stay as gold hits another all-time high. Our next guest says the precious metal could be about to get turned upside down. You're watching Fast Money, live from the NASDAQ market site in Times Square. We're back right after this.
AT&T has a new guarantee because not everything in business is guaranteed. At least she's cute. That's the cost of doing business. Get our best deals on smartphones like iPhone 16 Pro on us with your choice of our best plans. That's the AT&T guarantee. And right now, trade in your iPhone any year, any condition, and get up to $1,000 towards your new iPhone.
Only ServiceNow connects every corner of your business, putting AI to work for people.
Every corner?
Every corner, Nick. So, Kate in HR, hey, Kate, can focus on people, not process.
Oh, actually, I have a question.
Keep up, Nick.
Do you have to be sick to take a sick day?
Patty in IT is using AI agents to deal with the small stuff so she can work on the big stuff.
Agents like secret agents?
Secret agents I control.
With your mind?
You know, I played a secret agent once.
I know. Oh, God.
Why SelectQuote makes it easy to get the life insurance coverage you need to protect your family for less than $1 a day.
SelectQuote found me a $500,000 policy for only $16 a month.
We could help you save more than 50% on life insurance.
Visit SelectQuote.com. We shop, you save.
June 5th,
Good morning,
CNBC's
everybody.
Fast Money Live returns. Join Melissa Lee and the team of traders live and on air at the NASDAQ market site in New York City. Get your tickets now at cnbcevents.com/fastmoney.
Welcome back to Fast Money. We wanted to introduce CNBC's newest subscription streaming product, CNBC Plus. It's where you can stream Fast Money and any of your other favorite CNBC shows anytime, anywhere, on the go and also on demand. So if you can't catch Fast Money in real time, you can watch us later on CNBC Plus. What you're seeing on the screen right now, that's our CNBC Plus data feed, which gives you an enhanced data view and the latest headlines all throughout the business day. So you get Fast Money plus lots of additional headlines and extra market information. Very informational screen. I like that.
I like the
More
layout.
information,
Looks
the
cool.
better.
It's all there.
Exactly. Meantime, Uber shares in reverse today after the FTC sued the company for allegedly deceptive billing practices. The agency is saying Uber makes it difficult for customers to cancel their Uber One subscriptions and charges them without consent. The lawsuit is the FTC's first move against the tech company since President Trump retook office in January. Is Uber the U in
It is. The
Tube?
U in my tube. It had a great run, obviously sold off. I think it actually broke 70 at one point, back above 70 now. To me, it's still about an earnings story. This will probably get settled, one-time charge type of thing. It'll go away like most things typically do. And it comes down to evaluation and their dominance in the field right now. So I still think a lot of call buying apparently late last week in Uber as well. Uber reports on May 7th. I think it surprised people to the upside.
I think it will. I think the numbers are going to be strong, but I think they are one of the typical victims here of an economic slowdown, and consumer resilience will be tested here. So I think it's going to be about some guide. I think they're going to give you actually a read-through into what's going on. But we waited so long for that business to normalize, and now maybe hitting headwinds.
Does this make Lyft look that much better or no? I mean, Uber's more diversified in terms of its businesses and geographical reach.
I mean, on some level, although, I think if you're a weaker player that you were waiting to see their trends normalize, I think probably you get punished more. And this was the Ellen Blythe, by the way.
It was, yeah.
I agree. I think Lyft was in an interesting position before. Maybe it's the pure play in the space. Maybe it's going to take over Canada, but the weaker of the one in a down market isn't as good.
Yep.
It could be the Ellen Bland,
Could be.
too.
Look,
there's time to the year.
We were asked, based upon our Fast Money Live event, whether there's some flexibility with our acronyms. Jan, how did you answer that?
Yeah, but I don't even know. The only thing that's interesting about Lyft here is that it has a $1.5 billion enterprise value. I mean, that's it. Someone's going to take it over. I mean, the service sucks. We all know it. Everyone uses Uber, and so that North American.
I don't. I mean, I take Lyft. I try not to let people know I'm taking it, but it's cheaper. It's cheaper. I mean, sometimes it's 40, 50% cheaper.
Really?
Yeah.
No.
I see a bunch bigger.
I'm all about the
enterprise
Benjamins,
value.
people.
I see, 3.7. I'm sorry, I was looking at the wrong thing. So they have $2 billion in cash, they have $4.5 billion equity value, and they have $1.1 billion in debt. I can do some math here.
Coming up, unprecedented. That's what our next guest is saying about the rally we've seen in gold this year. Is the surge the best evidence we have that Sell America trade is here to stay? We'll get some answers right after this.
Missed a moment of Fast? Catch us anytime on the go. Follow the Fast Money Podcast. We're back right after this.
You found it then?
Of course I did. Good boy.
You did it. You took an idea on a napkin, built a successful business, and made it look easy. But at U.S. Bank, we remember what went into getting here. The hard work, self-doubt, tough decisions. From all those extra hours to finally enjoying the rewards. Our wealth management team is always here to work with you and every generation to come, because there's nothing as powerful as the power of us.
What Tractor Supply customers experience is personalized service made possible by T-Mobile for Business. With T-Mobile's reliable 5G business internet, employees get the information they need instantly. Tractor Supply goes further with T-Mobile for Business.
Introducing CNBC Plus, the new streaming platform from the #1 source in business news. Watch live or on demand. Access any market, anytime, anywhere. Start streaming. Go to cnbc.com/plus now.
I'm a supermodel. I used their Baked and Brighten like foundation powder, but I used it over the spackle primer. It was sick. Their squeezy blush and then their In the Buff lip. I'm a model.
I have a structured settlement and I call J.G. Wentworth 877 cash now.
I have an annuity, but I need cash now.
Call J.G. Wentworth 877 cash now.
It's your money. Use it when you need it.
Call J.G. Wentworth 877.
Call 877 cash now to get a $100 gift card for a free quote.
Framing is hard, but FrameBridge is easy. Custom frames, premium materials, transparent pricing. Get started at framebridge.com or visit a store today.
Welcome back to Fast Money. Stocks dropping to start the week, but finishing off their lows. President Trump upped his attacks against Fed Chair Jerome Powell yet again, stoking fears about the central bank's independence. The Dow dropping nearly 1,000 points. The S&P and NASDAQ losing just about 2.5% each. Meanwhile, Deckers Outdoor down 2% today. The parent company of Crocs in UGG now down more than 50% from its 52-week highs, down nearly 10% just this month. And Meta falling for a 7th straight day, its longest streak since April 2023. That stock is now down 35% from its record. Well, maybe the biggest sign the Sell America trade is on as investors unload U.S. Treasuries and the dollar. Gold hitting its 24th record of the year, settling above 3,400 today. The precious metal is now up almost 30% in 2025. John Ciampaglia is the CEO of Sprott Asset Management, which focuses on precious metals and critical minerals investing. John, great to have you with us. I understand the bull case underpinning gold's rise right now, but is there anything about the run in gold, the trajectory, the speed at which it's climbed that concerns you? Or is it all just up, and away for you?
Yeah, I mean, obviously this is unprecedented in terms of the pace of gold gains. You know, gold is not really designed to be going up 30% in a few months at a time on top of last year's 27%. Increase. So it is obviously signaling something. And obviously, you know, you just mentioned a whole bunch of signals and issues that the world is dealing with right now. You know, gold is really kind of an inverse reflection with respect to investor confidence with the U.S. dollar being the reserve currency. U.S. Treasuries, obviously the global economy and obviously the growing risks to whether we're going into a global recession due to the looming trade war has really got investors anxious. And one of the things that we find interesting is, yes, we've had this great appreciation, but inflows into gold ETFs year to date are only $30 billion globally. When you think about the paper losses that we've seen in a number of different asset classes, it's really a drop in the bucket. So it's really about investor sentiment right now, and it's hard to know when it will run out of gas.
John, it's Tim. It's great to have you. And I guess I want to talk about the flow action and, you know, gold as an asset class. And frankly, as a shareholder of your company, what it's meant for your company. Because in terms of free cash flow and the AUM growth, and you look at the trust, you know, I just did some digging. It looks like it's up 18% in terms of the AUM assets year to date, while most managers are down with the market. So what you're seeing in terms of fund flows. First of all, you probably don't want to talk about your stock, but I just did it for you. Talk about the fund flows to this as an asset class, because I think we're just getting going, even though I think we've all been looking at gold for a long time.
Yeah, I mean, I start off by saying that I think most investors have little to no gold in their portfolio. This is something that wasn't really required. And if you think about it, just a few months ago, it was all about Mag 7 stocks and the world was pretty orderly. And, you know, Trump was advocating a very pro-business agenda. Obviously, the world's flipped very, very quickly. And, you know, the Sprott Physical Gold Trust, it just seems as though a few weeks ago we put out a press release that it crossed 10 billion in AUM and we're now through 12. And that's obviously been market appreciation. But more recently, we're starting to see some very chunky inflows into the trust, you know, anywhere in the magnitude of $250 to $300 million in a single day. We're starting to see in the last couple of weeks. So investors are finally starting to allocate, not just in our fund, obviously, but gold ETFs right around the world have been big winners.
John, we've long said to be long physical gold through PHYS, and I think these are the reasons why. But yesterday, I think it was yesterday, President Trump put out a tweet. I'll read it. This is the end of it. He who has the gold makes the rules. Thank you. I don't know if that was a metaphor or he's actually talking about gold, but I mention it through the lens of a lot of countries are looking to repatriate their gold, which works really well for exactly what you're doing. Can you speak to that?
Yeah, I mean, this is a trend that's been going on, I'd say, for the last 3 years, and it really came out of the invasion of Ukraine, where, you know, the Russian assets were basically frozen in the SWIFT system, and a number of countries got very concerned about how easy it was for them to get cut off their financial assets. And I think the same concern flows through to physical assets, which some of which have been held in the U.S. for decades now. And so having the physical gold, I think, is very important. Obviously, banks around the world, central banks, are starting to change their foreign exchange reserves to skew more to gold. It's not just China. We see a number of central banks doing this. And I have no idea what President Trump meant by that tweet, but you know, the U.S. is obviously one of the largest holders of gold. We think there is a movement underway to basically remonetize gold, have it play a much more important role in the financial system. We're not advocating that we're going back to a gold standard, but clearly gold as part of an FX reserve is starting to go to the upside.
John, great to see you. Thanks for your time.
Thanks for having me.
John Champalia of Sprott. We're talking about the Sell America trade in so much as we are seeing weakness in equities, weakness in the bond market, but strength in gold. And John mentioned it, central banks increasingly buying gold, and it's got to be at the expense of something else, whether it be U.S. dollars or treasuries or fill in the blank.
It's playing it right before our eyes. Whether they're selling treasuries, selling equities, they're selling something, selling dollars, clearly buying gold. It's now 4 years now where you've seen each year a record amount of central bank gold buying, led by China, but by other countries as well. And when you hear countries like Germany, like other countries, say they want their gold back within their borders, it makes a lot of sense. You know, in a world where possession theoretically is 9/10 the law, you better want it and you better have it domiciled under your borders.
Cool. Bitcoin was also up nicely today in a risk-off day. Just this fear of, you know, if the Fed is no longer disciplined, then that would probably be very good for Bitcoin.
Gold miners, I think, are wildly cheap here. And again, the upgrades are going to just be mechanical based upon the spot price in gold. But if you look at the almost 50% move higher in gold from last year, gold miners have done 53% at the same time. I think there's still a lot left on the miner side.
All right. Want to hear more about where gold, the rest of the precious metals, and Bitcoin are headed from here? You can come join us for the next Fast Money Live event here at the NASDAQ on June 5th. You'll get a chance to go one-on-one with all the traders you see here on the desk today, plus a couple of soon-to-be-announced special guests.
Yes.
You'll also get to join Fast Money fans from across the country and around the world to join the community, talk investment strategy, share a cocktail or two, scan the QR code on your screen, or head on over to cnbcevents.com/fastmoney to grab your ticket right now.
Special guests. I mean,
I don't even know who they are.
Exciting. Well, yeah. I do.
We're going to keep it embargoed.
Not telling, but
How do you
very
know
special.
I don't know.
Well, Tim and I are privy to things.
Interesting. Coming up, a new bullish call failing to inject some magic into the House of Mouse, why Wolf Research is naming this entertainment giant a buy, and whether you should jump in. Next, more Fast Money in 2.
In any business, you ride the line between numbers and people. What's right for the business and what's best for everyone who depends on it. Solving today's challenges while creating future opportunities. It takes balance. CLA, CPAs, consultants, and wealth advisors will get you there.
You founded your kayak company because you love the ocean, not spreadsheets. You need to hire.
I need Indeed.
Indeed you do. When you sponsor a job on Indeed, candidates can find it easier, so you can hire easier. Visit Indeed.com/hire.
We were made for Huli, made to bring her joy. Because when a scary tumor threatened her story, we became her magic. Every nut and bolt became special. Each hand and tool dedicated to one quest, erasing that tumor and keeping her story alive, because we were made for Huli.
If you're shopping for a home, you could browse hundreds of listings to find homes with big yards, or compare lot sizes all at once. Search in full color to find space to grow. Home search will never be the same again.
If anything happens to me, I don't want my family to stress over money.
I searched best online life insurance, and Ethos came up.
It took maybe 10 minutes.
I got covered 100% online.
Ethos made it fast and easy to protect my family.
Check your price at ethos.com.
Comcast Business doesn't just power businesses. We help turn them into logistics mastering, supply chain transforming, seamlessly restocking, frictionless paying, poke bowl ordering, cyber securing, mobile access granting, data managing. Welcome to the worlding modern businesses. Powering the engine of modern business, Comcast Business.
Experience the power of CNBC Pro. Never miss a moment with exclusive access to market-moving interviews and stock picks. Become a smarter investor with the power of CNBC Pro. Go to cnbc.com/getpro now.
Welcome back to Fast Money. Call of the day on Disney here. Wolf Research upgrading the stock to outperform, citing strength in the company's core businesses despite broader economic slowdown fears. Analysts also suggesting the 25% sell-off in shares this year might be pricing in too much weakness, with the stock now trading at a historically steep discount to the S&P 500. 23% discount to the S&P 500, in fact, Tim.
Well, part of the argument here is that you've priced in recession for their core business, and even the discussion around the streaming is not giving enough credit to the profitability that they now really have. And if you think about when the stock rallied that gave it its last real boost, they gave uncommonly long-term and detailed analysis and at least forecast in terms of their business. I actually think that the market is underappreciating the cash flow ability here at this point. Whether it deserves the type of market multiple, I don't know. Historically, it traded there.
Yeah, if we're at 50-50 for a recession, I think that's where like Goldman Sachs is, some of these other strategists. I don't think there's too many consumer discretionary stocks that are pricing in recession right now. And I think that, that multiple you say relative to the market right here, I think any stock that you buy right now that is consumer discretionary, you better be prepared to buy it lower, because I just don't think there's anything that turns this economy very quickly, and certainly not the stock market.
Netflix is consumer-facing without question, but Netflix seemingly is winning. That quarter was very good. It had a decent day on a lousy tape. Look, it needs to do some work. It's got to get above that prior all-time high, which I think was 1040 or something around there, but I still think Netflix works.
So Disney is slowly paying down their debt, but they still have $45 billion worth of debt. Wow. That's not nothing.
Coming up, Tesla, not the only big name reporting this week. Lockheed Martin, Chipotle, Boeing, Alphabet, and more highlight a huge slate ahead. We'll take a first look at all these reports next. More Fast Money in 2.
5K fun run.
Say hi to Patty, celebrated social worker,
Who's coming in second?
self-appointed social chair, potluck, kickball, last call.
Sign up for Goat Yoga.
You name it, she's on it. And you have 47 emails to prove it. But her capacity to care is unmatched. You need Patty. Patty needs a retirement plan. Work with Principal so we can help you help Patty with a retirement and benefits plan that's right for her.
Good night, guys.
Let our expertise round out yours.
My UTIs were a recurring nightmare.
For the both of us.
Then we found support with Eucora. Eucora has UTI relief products and science-backed supplements that offer a proactive approach to urinary health. I finally feel free. Try today at eucora.com.
Next up, Chris. I see he searched how to tell if your cat loves you. Let's make him regret that.
Yeah. Betrayed by your cat? Adopt a dog today.
Yeah, they know, but not with Surfshark VPN. Take back your online privacy with Surfshark.
And that's what makes this game more unique.
Hey, you'll play pickleball?
Tonight.
7. See you later.
To get what you need, same day, the world needs warehouses. Blackstone made the connection early and became the largest private investor in logistics globally. It's investments like these that can help build wealth for your clients.
Welcome to CNBC Plus, market destination.
CNBC Plus, on-the-go access to global market data, news, and analysis as it happens. Start streaming at cnbc.com/plus.
Okay, $1 million deal on the line. You got this. Recaps and sales meeting insights from all my team's calls? Otter AI, it's you who is man's best friend.
Otter, the AI meeting agent.
I'm Dr. Shannon Klingman, the inventor of whole body deodorant like Mando. It's clinically proven to block odor all day and controls odor for 72 hours. Mando's unique formula stops odor before it starts. That's my secret to better odor control everywhere.
I'm a supermodel. I used their Baked and Brighten like foundation powder, but I used it over the spackle primer. It was sick. Their squeezy blush and then their In the Buff lip. I'm a model.
Boring. Certain you're on mute?
Yeah. Are you for imprint certain?
Certainty matters. Experience certainty with 4imprint. High quality promotional products, expert service, and on-time delivery. Visit 4imprint.com.
4imprint for certain.
Welcome back to Fast Money. It's not just Tesla headlining the big earnings this week. 110 S&P 500 companies and 6 Dow components set to report Q1 results. The slate includes tech giants like Alphabet and Intel, consumer-facing names Chipotle and PepsiCo, as well as key reports from Boeing, AT&T, Merck, Southwest, and more. So which one are you watching very closely, Guy?
Boeing's been a disaster. I mean, is this going to be the earnings release where they basically get everything behind them and sort of put forth a plan for the rest of 2025? Because the stock has been a disaster. Obviously, the China headline recently didn't help, but Boeing, to me, listen, it's an interesting list. Boeing's the one I'll watch the most closely.
So Boeing's on my whatever, I don't know, but
Well, she's laughing because she knows she doesn't play by the rules.
Which could have been Baba, but I don't think this quarter is actually the one. I'd hope this quarter is the one that mattered. Now that we're in this tariff situation, I think this is somewhat of a wrench for Boeing. But I am interested most in Alphabet. I definitely want to hear AI, of course. We want to hear anything on any hint of advertising more broadly and to them more specifically in search. But I don't know that we'll get any clarity.
Mm-hmm. In terms of especially whether or not they have to break up.
Right. Well, that we'll have no clarity yet.
Yeah.
The carb. There she is. Look at that.
I thought it might be the aerospace Boeing.
Oh,
yeah.
Because of the way you played the game, it would have fit in there.
The way she plays the game.
I'm reading. I'm looking over my shoulder because I'm reading. The E for energy is just so, how do you even?
She's like, I'm not going to accuse Karen. She's the highest integrity person outside of Melissa on this desk, so I'm not going to.
Low bar.
I'm not going to. I'm looking at transports this week, though. I mean, I think with everything we're hearing about China tariffs and whatnot, that will be the first. So far, no fall off. I think in terms of what we've seen in terms of rail volumes, that's going to be a big deal.
Google is interesting to me, and I think you're right. I mean, I think that, the stock was trading at all-time highs when they reported last time. It's down 30-some% right now. There's no reason that all these stocks, the Mag 7, won't be down 50% from those recent highs.
I'm excited to hear the first conference call from Lip Bhutan over at Intel to see what the plan is there, right? Should be an interesting one.
Stock is lower now than when he came in, right?
Yeah.
So that will be interesting.
Yep. Up next, final trades.
June 5th, CNBC's Fast Money Live returns. Join Melissa Lee and the team of traders live and on air at the NASDAQ market site in New York City. Get your tickets now at cnbcevents.com/fastmoney.
Nuveen invests with the foresight and vision to anticipate the needs of future generations, to build strong portfolios that deliver lasting legacies, to innovate and adapt for what's just around the corner. Because after 125 years of yesterdays, Nuveen knows your ultimate stakeholder is tomorrow. Nuveen, invest like the future is watching.
What if you could put aside your doubts and look to retirement with excitement? At Bright House Financial, we specialize in annuities and life insurance that help protect what you've earned and ensure it lasts. Bright House Financial, build for what's ahead.
Your record label is taking off, but so is your sound engineer. you need to hire.
I need Indeed.
Indeed, you do. Our advanced matching helps find talented candidates so you can connect with them fast. Visit Indeed.com/hire.
In the off-season, I'm a male hand muff. Now I have relaxed fit hands-free Skechers slip-ins. No bending down and no touching. I kind of love not using my hands.
Come on, Andy.
I'm out the game. Try relaxed fit Skechers slip-ins.
New projects means new project managers. You need to hire.
I need Indeed.
Indeed, you do. When you sponsor a job on Indeed, it's easier for talented candidates to find it, which makes it easier for you to hire them. Visit Indeed.com/hire.
We can't predict when rates will drop, but while you wait, the perfect home is selling to someone else. With over 500,000 new real listings every month on Realtor.com, find yours before it's gone. Start your search today.
I can't wait to see their faces when we go out. What seems to be the problem, soldier?
The belly's full of Greeks.
Sneaky cowards.
Innovation changes everything.
Send it back!
With one investment, you can access the NASDAQ 100 innovators who are rethinking the world. Before investing, carefully read and consider fund investment objectives, risks, charges, expenses, and more in prospectus at Invesco.com.
At Interactive Brokers, independent RIAs work with the best research and trading tools designed to help them outperform the markets. Meet them at Interactive Brokers Investors Marketplace for advisors. Advisors at Interactive Brokers keep all they earn on our low-cost platform with no ticket fees or custody charges, low margin rates, and high interest earned on idle cash. To get better results, get a better platform. The best informed investors choose Interactive Brokers.
Final Trade is sponsored by Interactive Brokers. The best informed investors choose Interactive Brokers.
Final trade time. Let's go around the horn. Tim O'Tay.
Yeah, I'm reluctant to do this, but I'm going to take a piece of Guy's clam, and I'm going to go AEM, because I think gold miners have a lot more beta to the underlying, and I think you can stay there.
Karen.
Nice one, guys. You guys on gold for a long time. Mine is I'm going to be selling some upside Netflix calls.
Dan.
Yeah, the B in your carb is in the K-Web. I'd rather buy Chinese internet here than U.S. internet.
Guy.
There's always room in my clam for you, Tim.
I appreciate that. It's a tight fit.
Welcome aboard. Walmart, WMT, Mel.
By the way, a special birthday shout out. Happy 21st, Joshua Canold. I know you're watching.
Yeah, Josh.
That money starts right now.
Very nice.
Investment opportunities are everywhere you turn. Do you charge forward? Freeze in your tracks? Or let curiosity light the way? At T. Rowe Price, we're asking smart questions about opportunities like AI and how the industry's born to support AI might better support us all. Better questions, better outcomes. T. Rowe Price.
I was tired of being told no to my dreams. But Shopify made it easy to get this brand going. Now we can take golf to a realm that we've never seen before. We're Eastside Golf, and we're powered by Shopify.
Since 2007, Origin has been focused on the future.
A future that helps you build passive income from real estate.
One where we invest by your side without hidden fees or confusing structures.
Build the future you deserve with Origin Investments.
SailPoint is a case study in reinvention, driving innovation to find new ways to protect customers and to help them thrive in volatile and unpredictable times.
SailPoint has a clear vision of how we can help enterprise customers secure their enterprises through the lens of identity. We're excited about returning to the public market, but it's not a finish line. We're going to keep going and continue to make a major impact on this industry.
Start streaming. Go to cnbc.com/plus now.
These bills are crazy.
She has no idea she's sitting on a gold mine.
Well, she doesn't know that if she owns a life insurance policy of $100,000 or more, she can sell all or part of it to Coventry for cash, even a term policy.
Even a term policy?
Even a term policy!
Find out if you're sitting on a gold mine. Call Coventry Direct today at 800-476-0100 or visit coventrydirect.com.
The actual journey of helping your hair, it is a lot easier than you'd think.
Hims definitely worked. I didn't expect so much hair to come back.
I went to the Hims website. Within 10 minutes, I was talking to a provider.
I started to see results in the first 2 to 3 months. Even when I'm running and my hair is sweaty, I do not have to worry about what it looks like.
And I don't have a white shiny spot anymore. Start today at hims.com.
I got this $1,000 camera for only $41 on DealDash.
DealDash.com. Online auctions since 2009. This PlayStation 5 sold for only 50 cents. This iPad Pro sold for less than $34. And this Nintendo Switch sold for less than $20.
I got this KitchenAid stand mixer for only $56.
I got this barbecue smoker for $26.
And shipping is always free.
Go to DealDash.com right now and see how much you can save.
The Wi-Fi is booming!
The Wi-Fi is booming. Xfinity. Celebrate 20 years of Mad Money. How Jim Cramer transformed investing in America.
It's insane!
The moments, the madness, the memories. The Mad Money 20th Anniversary Special. Tuesday, April 29th. CNBC.
Welcome to CNBC's Crypto World.
You'll find a community of hardworking creators with loyal followers, along with proud moments worth sharing. And farm to table, well, that's just supper. And whether it's a raised garden bed, acres of land, or something for your animals, we've got all the supplies and are happy to share a little know-how.
Welcome to Tractor Supply, into life out here.
C Plus, on-the-go access to global market data, news, and analysis as it happens. Start streaming at cnbc.com/plus.
If your clients are only investing in public markets, they're missing out on the 90% of companies that are privately owned. Maybe it's time for a bigger pond. Start building wealth for your clients with private market investments.
Hey, Fred Couples. Welcome to Consumer Cellular. I hope you like orange.
It's a bit bright.
Yeah. All right, give me the pitch.
Switch from big wireless to Consumer Cellular and save your money for extra rounds of golf and great coverage wherever you play.
Nice read, Fred.
Thanks, Ted.
Ted and Fred. That sounds nice, doesn't it?
I kind of prefer Fred and Ted.
Oh, yeah, too late. I already had the shirts printed.
Save your green for the greens. Right now, get your second month free. Call Consumer Cellular.
Did you know that your life insurance policy is an asset that you can sell? Hi, I'm Jay Jackson. I'm the CEO of Abacus Life. And for almost 20 years, we've been purchasing life insurance policies from seniors just like you. In fact, you can use the free policy value calculator at abacuspays.com. And in just seconds, you can learn what your policy might be worth. There are no fees and no obligations. Get real value from your life insurance when you need it with Abacus.
All right, so let's get started.
Wave hello to Zane. He's king of the ping.
Hi, Zane.
For every one sentence spoken on a call, he has 3 comments, 2 memes, and 4 emojis to contribute. A flood of positivity during every single meeting.
Thanks, Zane.
But oh, how his passion for product management takes your team from level 0 to level Zane. You need Zane. Zane needs benefits. Work with Principal so we can help you help Zane with a retirement and benefits plan that's right for him. Let our expertise round out yours.
Guys, got hair loss? I know what you're thinking. Should I shave my head? Comb it over? Wear a hat? Just stop. This isn't 1970. Keep your hair and your confidence because Bosley, America's #1 hair restoration experts, can give you your real hair back permanently. Check them out because they're giving away an absolutely free information kit and a free gift card to everyone who scans this QR code. Dude, you don't have to look like your dad because this isn't your dad's hair loss treatment. People all over the country trust Bosley because they're ahead of the curve. They use the latest technology to give you your real hair back. And the best part, Bosley's permanent solution is protected by the Bosley Guarantee. Let them show you for free how awesome your hair could look with an absolutely free information kit and a gift card for $250 off. Scan the QR code. Don't wait. Scan the code now and ask about the Bosley Guarantee.
Join the club and let me teach you to become a better investor.
Jim Cramer is the best teacher that I've ever found because he's honest and he's transparent.
Get invested. Join the club today. Go to cnbc.com/join Jim.
Hello, everyone. I'm Julie Sweet. Welcome to another edition of Reinvented with Accenture. Today is a very special episode. Normally, we're talking about reinventing a company. Today, we're talking about reinventing a country.
Payments have to be fast, they have to be secure, they have to be convenient, and they have to be inclusive. Those are things which are not negotiable. And when you think about it, there is no single commercial transactions which doesn't rely on a payment at some point.
Power E-Trade's easy-to-use tools like dynamic charting and risk-reward analysis help make trading feel effortless. And its customizable scans with social sentiment help you find and unlock opportunities in the market. E-Trade from Morgan Stanley.
A little over a year ago, during a routine mammogram and ultrasound, I was diagnosed with triple-positive breast cancer. Luckily, my cancer was found early and hadn't spread. I finished my treatment, and now I'm cancer-free. If I had waited a few months longer, things could have been way worse. Caught early, many cancers have survival rates well over 90%. However, most people don't prioritize their recommended screenings. Take it from Pam and her Pam-Pams. Michael was right. Get them checked, ladies. Consider this your kick in the butt to get your recommended screenings, no matter how busy things are at work. And if you're an employer, you have the power to save lives. The Screening Time Off program encourages employees to take time to step out for screenings. Be the world's best boss. Join Screening Time Off. Your employees will love you for it. Well, maybe not love, but like a lot. Learn more and sign up at workingwithcancerpledge.com.
Out here, you'll find a community of hardworking creators with loyal followers, along with proud moments worth sharing. And farm to table, well, that's just supper. And whether it's a raised garden bed, acres of land, or something for your animals, we've got all the supplies and are happy to share a little know-how.
Welcome to Tractor Supply, into life out here.
University of Maryland Global Campus is a school for real life, one that values the successes you've already achieved. Earn up to 90 undergraduate credits for relevant experience and get the support you need from your first day to graduation day and beyond. What will your next success be?
My UTIs were a recurring nightmare.
For the both of us.
Then we found support with Eucora.
Eucora has UTI relief products and science-backed supplements that offer a proactive approach to urinary health.
I finally feel free.
Try today at eucora.com.
Putting people first. It's always been our thing. That's why Hyundai is committed to keeping our prices the same, with no increase to MSRP. And not just on a few of our vehicles, all of them. That's the Hyundai way.
Lightning Round is sponsored by Charles Schwab. Trade brilliantly.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
As a financial advisor, you know building a retirement plan practice takes work. But it doesn't have to be all on you. Capital Group can streamline the job with a platform that helps you guide and grow clients more efficiently. Because we know just one person. Build your retirement plan practice with Capital Group.
SailPoint is a case study in reinvention, driving innovation to find new ways to protect customers and to help them thrive in volatile and unpredictable times.
SailPoint has a clear vision of how we can help enterprise customers secure their enterprises through the lens of identity. We're excited about returning to the public market, but it's not a finish line. We're going to keep going and continue to make a major impact on this industry.
Is Cialis Daily better than Viagra? Does it last longer than Viagra? Are sample packs available? Get started with a 30-day sample pack. Generics now only $1 per tablet at rexmd.com/30.
I'm certain it's level 5.
Are you for imprint certain?
Certainty matters. 4imprint is your home for promo gear to wow clients and inspire your team. Check out 4imprint.com.
4imprint for certain.
These bills are crazy.
She has no idea she's sitting on a gold mine.
Well, she doesn't know that if she owns a life insurance policy of $100,000 or more, she can sell all or part of it to Coventry for cash, even a term policy.
Even a term policy?
Even a term policy!
Find out if you're sitting on a gold mine. Call Coventry Direct today at 800-476-0100 or visit coventrydirect.com.
Don't hate me because I'm beautiful.
Mark, you do all the work?
Right? That's what I always do.
You got a deal.
Deal!
Awesome.
Appreciate it, man.
Thank you.
Let's go!
Shark Tank, coming up next. CNBC. Introducing CNBC Plus, the new streaming platform from the #1 source in business news. Watch live or on demand. Access any market, anytime, anywhere. Start streaming. Go to cnbc.com/plus now.
It's been 10 years since Shark Tank ignited America's entrepreneurial spirit, and we're still blazing a trail for those who take their fate into their own hands. And tonight, branding expert Rohan Oza returns to the tank.
Coming onto Shark Tank is not a business plan. You need to